Okay, let's just state the obvious. The economic landscape? It's shifting. Big time. We've got new regulations on the horizon. And guess what? Your finances are right in the middle of it all. So let's dive in and make sense of it.
And that's really the big question, isn't it? So in this explainer, we're going to break down all the crucial economic forecasts and the new rules you need to know about. Think of it as your guide for the road ahead. All right, first up, let's zoom out and look at the big picture. We're going to be looking at the official spring forecast from the Office for Budget Responsibility, the OBR. They're the UK's independent economic watchdog, so their numbers give us a really good sense of what the economic climate is shaping up to be.
And right off the bat, the first headline number is, well, it's a bit of a reality check. GDP growth is forecast to slow right down to just 1.1% in 2026. Now that kind of slowdown, it sets a pretty challenging stage for both businesses and households as we head into that year.
And, a slowdown like that, it naturally has a knock-on effect on jobs. Unemployment is expected to peak at 5.3%. The OBR says this is mostly because companies are just going to be more cautious with their hiring. And that, of course, could make things a bit tougher for anyone trying to enter the workforce.
So we've got a slowing economy, but that's not the whole story. At the same time, the tax burden is set to climb to a post-war high. Think about that. It signals a much heavier tax environment for all of us. So let's dig into why that's happening. Okay, so when you put all these numbers together, what's the story they're telling us? Well, as you can see here, the short-term challenge is pretty clear, right? We're looking at slower growth and rising unemployment in 2026. But it's not all doom and gloom. If you look further out, the forecast does show a recovery on the horizon, with GDP growth picking back up and unemployment starting to ease. So, that's the big economic picture. But how does that macro stuff actually translate into something that affects your wallet? Well, it's all about something called the tax squeeze. And the main culprit behind it is a concept known as fiscal drag. Fiscal drag. It sounds complicated, but it's really not. It's basically a stealth tax. Here's the deal. It's what happens when your pay goes up. Maybe you get a raise or just an inflationary bump, but the government freezes the income levels, the thresholds, where you start paying higher tax rates. So you end up getting pushed into a higher tax bracket without actually feeling any richer.
Let me break it down. Step 1, your wages go up. Simple enough. Step 2, the tax thresholds don't budge. They stay exactly where they were. So what happens? That new, higher wage of yours pushes you over the line into a higher tax bracket. The result is you end up paying more tax even if your actual spending power hasn't really gone up at all. And this isn't just theory. It has very real consequences. Check this out. The personal allowance, that's the amount you can earn tax-free, is frozen. But at the same time, the state pension is rising. They are on a direct collision course. And starting around 2027, the state pension is actually forecast to be higher than the tax-free allowance. The bottom line? An estimated 1 million more pensioners will find themselves paying income tax by 2030.
Okay, let's switch gears for a bit. We've talked about the economy. Now let's talk regulation. Because there are some pretty major new rules coming down the pipeline that businesses, especially, really need to get on their calendar. So here's a quick roadmap of what's coming. Mark your calendars. First up, April 2026, we've got some important changes to employment rights kicking in. Then in July, the whole buy now, pay later world comes under full financial regulation. And then, looking a little further ahead to January 2027, a brand new carbon import tax, known as CBAM, goes live.
So let's talk about those buy now, pay later changes. What does that actually mean for you? Well, since millions of us use these services now, it's no surprise that regulators are stepping in to provide more protection. The new rules mean lenders have to be way more upfront with information. They'll need to do proper affordability checks, to make sure you can actually afford the borrowing. They'll also have to offer support if you get into difficulty. And, this is a big one, you'll finally be able to take any complaints to the Financial Ombudsman Service.
And that other new thing, CBAM, what's that all about? Well, CBAM stands for Carbon Border Adjustment Mechanism. It's basically a new tax on certain imported goods that have a high carbon footprint. We're talking things like steel, aluminum, and cement. The whole idea is to level the playing field, right? It's designed to stop UK companies from being undercut by competitors in countries that might have, let's say, looser environmental rules.
Okay, so we've got a tougher economy, we've got new rules coming in, it can all feel a bit overwhelming. So the big question is, what can you actually do about it? Well, in this final section, we're going to get practical. We'll look at some smart tools and strategies you can use to really take control.
All right, for all the business owners out there, this is a fantastic little tool. It's a super simple traffic light system for your key financial metrics. Instead of getting bogged down in endless spreadsheets, this gives you an instant, at-a-glance health check. Is your cash flow green, meaning you've got months of expenses covered? Or is it amber, maybe a bit of a warning sign? Or is it flashing red? Doing this for things like debt, profitability, and your sales pipeline helps you spot problems way earlier and, honestly, just make smarter decisions. Now here's one for both employers and employees that often gets overlooked: salary sacrifice. It sounds complicated, but it's a really clever way to save money. Essentially, you agree to sacrifice a part of your gross salary in exchange for a non-cash benefit, like a bigger pension contribution. Because you're technically earning less, both you and your employer pay less in national insurance contributions. You can see in this example, the employee saves 18 quid a month and the employer saves 21. It is a total win-win and can make benefits way more affordable.
And before we wrap up, here are a few more quick tips to keep in mind. First, look out for the new Fuel Finder scheme. It's a government thing that will let you compare fuel prices at every UK petrol station on an app, a super easy way to cut travel costs. Second, if you have investments, with the UK market doing pretty well, now could be a really good time to review your holdings and make sure you're using your capital gains allowances. And finally, and this is a big one, just be proactive with your tax planning. In this climate, it's more important than ever to stay on top of things. So, there you have it. We've looked at the economic outlook, we've dived into the tax squeeze, and we've covered a whole bunch of new regulations on the way. Which brings us to the final, most important question, and this one's for you. Whether you're running a business, you're an employee, or you're a pensioner, which one of these changes is going to hit home the hardest for you? Because really, thinking about that right now, that's the first and most important step to staying ahead of the game.